our problem is not a lack of boots on the ground. Our problem is the people on the ground are paying prices that we don't want to pay.
Yeah.
That's our problem. And that problem is not going to be cured by boots.
We can spend $100 billion in the next year. That is not a problem.
No.
Spending it intelligently is a huge problem.
Our competitors are buying with somebody else's money, and they get part of the upside and take none of the downside.
And they'll
that is hard to compete with people like that.
Yeah, they'll leverage it up. They'll make a lot of money if it fails, and they'll make even more money if it succeeds. And that's not our equation.
No.
And that isn't always that way, but it's certainly that way now. It's probably.
It's not in the shareholders' interest that we get to be like everybody else.
In studying the most significant value creators of all time, it is very evident that the major compounding effect happened at the later stages of the careers, or in Vanderbilt's case, even beyond his own career. So your recent investments have suggested to me that you are designing Berkshire to being a steady compounding machine that should continue to create value for a very long time. Would you both please elaborate on this compounding machine and the machine's ability to continue to adapt to keep this value creation durable? And then, is this legacy one of your sort of primary motivations when you wake up every day?
I would say it is the primary motivation, but it's been that for a very, very, very long time. No matter what was going right in my life, if things were going badly at Berkshire, I would not feel good. I don't need to be spending my time working on something that makes me feel bad about the results, when we get through. And it's something that's doable. I mean, the culture is stronger now than it was 10 years ago, and it was stronger then than 10 years previously. It moves slowly, but it goes in the right direction. And when we get chances to deploy the capital, we've always tried to make any entity, whether it was the partnership originally or Berkshire now or Blue Chip Stamps when we owned it or even Diversified Redeemed, we wanted them all to be compounding, in effect, be compounding machines. That's why people gave us capital. That's why we put our own capital in. And if we failed at it, we really felt like we'd failed. It didn't make any difference how much money we made from fees or anything like that. We knew what our yardstick was. And so that will continue. I think Berkshire is better situated than it's ever been, except for the fact that size is a drag on performance. And I probably wrote that 40 years. Well, I wrote it actually when I closed the partnership, the new money, when we had like $40 million in it. I just said that really that additional capital would drag down returns from a $40 million base. So you can imagine how I feel with a $368 billion base of capital in Berkshire now. But this culture is special. It can work. It won't be the highest compounder by a long shot against many other businesses. I think it'll be one of the safest ways to make decent money over time, but that will depend on the people that follow us. Charlie?
Well, we came a long way from very small beginnings, and the fact that it slows down a little when it becomes monstrous is not my idea of a huge tragedy. And I think we will continue to do very well in the future. We had nothing like the energy operation 20 years ago, and it's a powerhouse. We had nothing like Kevin's operation in home building 30 years ago, and it will soon be the biggest. Well, even now it's bigger than anybody else in the country if you count both types of housing, isn't it? Houses? I think so. And we have a lot going for us, and I'm satisfied. I think it's going to continue reasonably.
And it would ruin our life if we did it terribly. So that's what we wake up thinking about in the morning. But I wouldn't want to be in a business where I was going to let down other people. And I think it'd be crazy to do something like that, even if you weren't rich in '88. So But we are motivated to have something that is regarded as something different than others. And we're actually in a world where so much money is institutionalized. I like the idea of having something that's actually owned by individuals in very significant part who basically trust us and don't worry about what the next quarter's earnings are going to be. I think it's different than much of capitalism, and I think it's something that Charlie and I feel good about.
Do you think that Amex's share of mind is enough to win the credit cards race? How do you see Amex's competitive position now compared to the past, and who is the most threatening competitor now compared to the past?
Yeah, everybody's a competitor, and including now Apple that has just instituted a card, I guess, in conjunction with Goldman Sachs. Everybody, there will always be, in my view, many competitors in the business. Banks can't afford to leave the field. It's a growing field. They build up receivables on it. But I wouldn't think of the credit card business as a one model business any more than I would think of the car business as essentially being one model. I mean, Ferrari is going to make a lot of money, but they're going to have just a portion of the market. Well, Amex is growing around the world with individuals, is growing around the world with small businesses. You just saw the contract they made with Delta, which is probably the ideal partner that runs, for 8 or 9, whatever it may be, 9 or 10 years actually. The billings go up per capita, they go up, the coverage spreads, and they're going to have loads of competition, and they always will. But they had, that's something. J.P. Morgan, took on the Platinum card and was a competitor, and the Platinum card had highest renewal rates that they've had, and they increased the price, I think, from $450 to $550 during a competitive battle, and retention improved, and new business improved, and 68% or so of the new business was millennials. I mean, it is not an identical product with anything else, and as a premium card, it has a clientele which is large. It may be X percent of the market, it may be 3/4 of X%, or whatever it may be. It isn't for the person that likes to have 5 cards and look every day at which one provides the most rewards that day, or in what gas stations or something of the sort. But it's got a very large constituency that has a renewal rate, a usage rate that's the envy of everybody else in the industry. So I like our American Express position very well. Charlie? Charlie, anything on American Express?
No, I think we own the world as long as the technology stays the same.
It's an interesting thing.
I have no opinion about technology.
This year, the technology is not the whole thing. I mean, fortunately, I mean, if you look at credit card usage, there are a lot of different things motivating different people to use various types of payment systems, and there's a lot of them that are growing. There's some of them that are marginal, and American Express is an extraordinary operation. And I think this year, our share of the earnings, well, by next year, our share of the earnings of American Express will be equal to the cost of our position. We'll be earning 100% on what that position cost us, and I think it will grow. And I think the number of shares will go down, and our interest will go up without us laying out a dime. So it's a.
As you say, we own the world if it doesn't change.
Well, even if it changes something, the world has changed a lot. American Express was formed in 1850.
No, I'm talking about WeChat.
You can talk about all kinds of competitors, but,
Yeah.
but the American Express actually was an express company formed in 1850, like I say, by Wells and Fargo of all people. And for a while they carried these big trunks around of valuables, and then the railroads came along, and that wasn't going to work very well anymore. So they went to the traveler's checks, and it's a very interesting thing. In 1950, when I was living at 116th and Broadway, they were down at 65 Broadway. And they were the most important name in travel. They were synonymous with the integrity of their traveler's checks. And the whole company, in a record year for travel, earned $3 million. $3 million, what a bond trader earns now in my lifetime. That's what they've done with, and their hand going in was the traveler's check, which has more or less disappeared. But the American Express, the power of that brand, intelligently used going into the credit card business, where they entered much later than the Diners Club, later than Carte Blanche, but they came to dominate the luxury end of the credit card business. It's a fantastic story, and I'm glad we own 18% of it. Okay, Jay?